Sasol also reported a drop in interim dividend to 2 rand per share. CEO Fleetwood Grobler speaks to us now. Thank you so much for your time, Mr. Grobler. How have shareholders received the news of your interim results on the JSE and trade overall? Not looking too great.
Yeah, good evening, and thank you for the opportunity. So I just want to put in perspective the areas in terms of the reporting period, what we have seen as headwinds and what we have done as Sasol to mitigate some of those headwinds. So when I look at the business segments, I look at mining, we've seen an increase of 16% of our export coal volumes, but that was facing a headwind on coal pricing of a 59% decrease in prices. Our gas business, we've seen a 10% volume increase in terms of demand, but that was offset by a flat rand pricing mechanism that was stayed flat for the last 2 years, which we couldn't recover any additional cost that was coming through. Our fuel segment, 8% increase in volumes. Of course, the oil price is lower compared to the previous period. And in our chemicals Africa, albeit increase in 3% in volumes, that was also offset by headwinds of pricing to the magnitude of 21%. If I look at our US chemicals business, a very similar story, although we have recovered volumes by 12% there on the comparative period, but the pricing headwinds was around 28%, and our Eurasian business is the only one that we have a lower volume compared to the prior period, but we have seen a 4% decrease in output to market demand, but a pricing headwind of 23%. When I calibrate that also on the cost that we reported, a 5% increase in cost, but when you normalize that for inflation and currency translation effects, we have actually come down on a year-to-year comparison of just under 1 or just over 1% on a comparative period. So I think we try to focus on the areas we can control, volume and cost and capex spend. That was also part and parcel of the reporting period. We've just come down a bit in terms of our capital program. But I think more importantly is that the big project that we're executing in Mozambique, the PSA project, is the biggest project on our books after the LCCP project in America. That is executing very well in terms of its costs. It's within budget, and time is also within schedule. We're going to see that plant being commissioned towards the end of this financial year, and we're looking forward to the completion there. So there are areas that we really mitigate some of these headwinds through the impact of strict cost control and capex and volumes.
In the near term, though, what's the expectation given the price pressures that you've noted that are across the board?
We see a bit of reprieve in oil price coming through in the last months. So we're not sure that that is only, as a result of geopolitical pressures that is in the Middle East now coming through, or whether that's more a fundamental supply-demand normalization. We know that interest rates are stabilizing and may even come down towards the end of the year. That normally stimulate economic activity. That may increase demand for oil and some of the commodities further. So we hope to see that coming through that will relieve some of these pressures that we are seeing from a macro point of view, but that will not deter from our focus on the things we can control with respect to cost and capital.
Lastly, I'm glad you mentioned the Mozambican operations because of late there's been criticism that has been leveled, or speculation, if I were to put it that way, accusing Sasol to possibly be at the blame of a shortage in gaseous products in South Africa. How does the company react to that in the new year of 2024, as you alluded to demand increasing?
So we have seen that since 2004, we started to flow gas from Mozambique. So this is the best part of 20 years that this is flowing through our gas fields there. And like any gas field, there is a natural decline out of the gas field, and you need to invest to explore in terms of your exploration program draw more wells, which you haven't got certainty of that it will be successful or not. So we've indicated to our industrial gas customers that the decline of that field will start commensurate the 2025-26 time period. And this is just the fact of the matter is that the gas is in decline and we need to find alternative sources of gas. The new gas that we invest in is too pricey for the customers to reflect in terms of the pricing. We've seen NERSA keeping prices flat in rands. And so the only way is to look at our IRP that is underpinning a gas vector of energy in South Africa, which is underpinned by liquid natural gas, which is LNG. And this is an area that we as South Africa need to get our minds around how to bring in LNG into South Africa, because as I say, we cannot hang our hat only on exploration with the hope that we'll find more gas in Mozambique. And the new investments we are doing in the PSA, etc., is for the beneficiation of gas in Mozambique into electricity, with some of the gas there that we will bring to South Africa should that be agreed with the Mozambican government. So I do think we are trying our utmost to get all parties together. The DTIC has taken the lead in November last year to convene all the gas users to see if we can't put up a South African Inc. support for an aggregator role that government can play to bring in LNG. But Sasol on its own cannot stand good for the LNG on our balance sheet because that is not affordable. So the customers and the users of gas also need to consider that to commit to bringing in gas by standing good for those gas contracts that we eventually have to make, with off-takers or suppliers of gas.
Thank you for your input. That is Sasol Executive Fleetwood Grobler speaking to us on the business desk this afternoon about their latest interim results. Not too great, but the near-term outlook is slightly positive.